Stock market for beginners. Why Apple stock is dropping? I'm going to talk about the reason why, and we're going to talk about last week stock market and this coming week stock markets. And there are 5 stocks that reported earnings in this coming week. And look at this map. So technology is red, healthcare is green. So if you look everywhere, almost everywhere is red. And the stock market started with a drop the beginning of the year, January 2nd, and it has been dropping, and that's pretty serious. But don't worry, it's just very normal. The stock market is taking profits. There are lots of investors, they gain a lot in November and December. And I'm going to tell you why stock market is dropping, and we're going to look at stock markets and analyze and what could happen in the next week or probably in the next few weeks. So S&P 500 dropped 1.79% in the past 5 days. So S&P 500 and Nasdaq dropped 3.81%, and Dow Jones dropped 0.62%. And look at the chart; it's very steadily decline. It hasn't been that way for a long time. If you look at the past 6 months, it has been going up. Look at that. Nasdaq, it had been going up. So why did it drop? It's because of Apple. Apple stock dropped 6.61% the past 5 days. So if you look at the past 1 year, it's up 39.78%. 1 month, 4.79%. 6 months, it hasn't moved at all. So that's why I haven't bought Apple stock. Like I said before on my channel, I thought Apple stock was overvalued, and I stated it's overvalued. So that's why I haven't bought it yet. You have to be patient. If you want to be good investor, be very patient. Do not buy overvalued stocks. And I do not see any catalyst that's gonna push up Apple stock higher compared to Nvidia or Microsoft or Google or Meta. And there are a few reasons why Apple stock dropped. One of the main reasons it dropped was because there were 2 analysts downgrading Apple stock one after another, and Apple's shares also slipped on the report. US government is preparing antitrust lawsuit. There will be some lawsuit coming, but at least that's pretty normal. That's nothing that Apple can deal with. But the main reason why I think Apple stock is dropping is because of the demand. Apple supplier Foxconn expects Q1 revenue drop after demand slows, and I do not see Apple innovating so much in the recently years. 1 or 2 years, I don't see any new products at all. And of course, Apple is the most valuable company in the world. So because of this drop, it could be risking the title as the most valuable company in the world. And stocks are having their war start to a new year since 2003. So in 20 years, this year is the worst year to start in the stock market. So you might be asking, oh, then you might be losing money in the stock markets because stock market is having a very bad year. No, I made over 2,300 in 1 day on January 2nd. Then January 1st, the stock market was closed because of New Year. And May, reason why I made money was because I invested in American Express last year when it was undervalued. And I sold it because I found better stocks for this year. So there are only 3 reasons why you should sell a stock. Number 3, if you think that stock is no longer a good company, if you no longer believe in the business and the futures, you sell the stock. The second reason is that if I find better stocks, I will sell this stock. And the first reason is if I need money in the next 6 months or 1 year, I will sell the stock, or I don't even use the money in the first place. So if you need money, my suggestion as a friend is to sell the stocks and keep the cash Of course, that's not a financial advice. That's a very, very reasonable common sense to do it. And I don't even invest money if I go to need it in the next 6 months or 1 year. That's even better. And this is a call options. If I use two options, and this is called advanced options. So if you look at it, I only use 1,700. I made 638. But 10 times the amount, 17,000, I only made 2,000. It's only 3 times, around 3 times more than this profit. So that's why I like stock options. And if I use advanced options, it's even better. The risk is minimized, the gain can be more. So you might ask, why do you lose money here? Because it's risk management. If I use advanced option, if the stock market is bullish, if I know that if I take bullish directions, then my return is much higher. But if I'm wrong, then my risk is minimized. I could even make small profits if I do it correctly. So that's why I love advanced option. Not only that, if you look at that, in 2 days I made over 4,000. So look at that. On third, I made 1,700. So probably around 1,800. And look at Thursday, I lost 100. It's not a big deal, it's very, very normal. On January 5th, I made 700. So over the past 4 days, stock market open New Year, stock market has been dropping like this seriously. The last 5 days, 3.81%, and I made over 4,700. So close to 5,000. So that's when I'm traveling around the world. I only spend 1 to 3 hours a day trading stock options. I still make money. So that's the financial freedom. The taste of financial freedom, time freedom, location freedom. You can start stock investing or stock option trading using the link down below, and you can watch my other lives on YouTube playlist. And I'm going to talk about 5 stocks that are reporting next week. So let's look at it. So the bad stocks, why did I say American Express? One, everybody is telling, the bad stocks are going to outperform in 2024. The financial setups, European bank stock deserve more attentions, and you take advantage of regional bank fall by buying cheap financial stock. Of course, I did all of that. That was in last year, and I bought American Express. And so why did I say that? Because I believe that if there's something goes wrong with the banks in this year, let's say the bond yields are stay high, so maybe 1 or 2 banks may have some issues giving deposit, and they need to sell the bonds. They could lose lots of money. So if that happens again, I don't want to lose money. So I tend to avoid bank stock. Plus, the bank stocks, if the interest rates are going up, they make more money. But if economy is going down because high interest rate, they stay lose. And of course, if Federal Reserve is going to get the interest rate this year, their interest income going to go down. If economy gets worse, it's double whammy. They're going to lose more. So there's always positive and negative together with only the bank stock. And so I do not like that kind of business. So that's why I sold American Express. I took profits, and plus I found better stocks that I want to buy because of the buying. I told you before, in December or January there might be some dip buy opportunity. Of course, December it did not happen. So now January is a perfect opportunity to do dip buy technology stock that if you do not own them yet. And that's what I did. American Express is a good company. Look at the past 5 years, 91.84%. It passed all my 5 criteria. It has been in business for more than 10 years. Yes, since March 1850. Has it been a public company for more than 5 years? Yes, it has been more than 5 years. The public companies. How about the past 5 years? Has it been going up? Yes, it has been. And I look at financial statements. I like the business because of credit card. And the other side of the business is the banking. I do like it. But look at the financial statement, it's a great company, so I invested and I took profits. Of course, it can go up higher more after I sold the stock, but it's okay, I took my profits. Let's talk about last week's stock. WBA, Walgreens Boots Alliance, it dropped 5.52% over the past 5 days. Look at that dividend yield. It used to be more than 7%, close to 8%. Now it's only 4%. A PE ratio jumped. PE ratio used to be only 17, 18. Now it's 37.62. What happened? Because of disappointing financial performance. They need to cut their dividend by nearly 50%. That's horrible. Their financial results were horrible. So that's why PE ratio jumped. So that's why I don't look at PE ratio. Sometimes you might think, if PE ratio is high, it's a growth company, then I like to buy. Or some people are gonna think, PE ratio is so low, it's a cheap company, I'm gonna buy. No, I don't think that way. This time, WBA PE ratio jumped because it sucks. The financial statement sucks. The financial performance sucks. And also, it used to be low. It used to have low PE because it wasn't growing too much. So if you look at it this way, there's no meaning just by looking at PE ratios. That's why I don't look at PE ratio. A dividend, I don't look at dividend because they can cut it anytime. It used to be more than 7%. Now it's only 4%. What's the point? Most people don't look at it this way. They look at the last 5 years. For me, if I look at it the last 5 years, the stock has been going up. I don't touch it. But some people, they think, it used to be 71.89 stock. Now it dropped to 52.16. So I should buy because it's getting so cheap. Then it dropped furthermore. It dropped to 21. Then you know what? They're gonna keep buying. So that's how they lose money. No, do not keep buying. If you see stock the past 5 years, it has been dropping. No, it's not a sign. It's not a sign of a good company. So I don't buy it. And WBA, and 47 years, the first time they cut dividend, it's not a good sign. In the 47 years, it doesn't mean that it could not turn around. It could stay turn around, but I'm not gonna bet my money while waiting for the turnaround. I need to confirm. I need to see the stock reverse, going up consistently, probably for 6 months or for 1 year. The longer it is, the better it is. Conagra Brands, it dropped the past five days, and it stayed better than WBA. The past 5 years, it stayed positive. But I don't like this business, like I said in the last video, so I'm not gonna invest in Conagra brand. And dividend is not bad, 4.96. It doesn't matter to me because I made money by selling option, advanced option, 4,700 in 1 week. And let's look at it. Because of the missed financial result, of course, because of missed financial result, the stock dropped. It's not a surprise. Remember, the only reason why the stock can go up is because of good financial results and good guidance. The profits are going up, the revenues is going up. That's why the stock is going up. Look at the next stock. Kura Sushi is up 12.34% the past 5 days. And the past 5 years is up. Yeah, like I said before, this has been in the business for more than 10 years, but it hasn't been a public company for at least 5 years. This year, 2024 August, it will have been 5 years as a public company. Then I can think about it. I'm just gonna add to the watch list that after it has become 5 years as a public company, then that way I can look at financial statement. Is a good company to invest. But this is sushi business, restaurant. I do not like it because if COVID happens, pandemic happens, they can always close store. Then there's no business. So I don't want to risk it. I don't like the business. I like sushi. I like eating sushi, but I don't like restaurant business. So I'm gonna pass. I can keep in the watch list to trade, but I'm not going to invest for long term, like at least 1 year or longer. The next stock, Constellation Brands, it's up because they reported good results, And the past 5 years, 55.47. It's not bad. Dividend is 1.44%. It really doesn't matter. I can keep it in a watch list as a trading company, but I don't like alcohol business, so I'm not going to invest in that. And last week, the report was pretty good. The job openings was good. ADP employment was 164,000, pretty good, compared to forecast of 130,000. U.S. economy has been phenomenal for the past few years, and that's why we are landing, soft landing, Goldilocks situation. Inflation has been coming down, and lots of people still have jobs, and their wages are growing. Our wages grew because there's a raise, New Year, there's a raise for that. So yeah, everybody was happy, and stock market dropped because it's very easy, and some people took profits. And this coming week, Thursday, January 11, core CPI. This is a very important data. If core CPI drop more than expected, then we could see stock market reversing back. And now I believe there's no reason for stock market to keep going up, so they might be dropping until next week, Thursday, January 11. If the data is so good, it could go up again. Or the earnings report coming next week and at the end of this month. If the earnings reports are coming really good, then stock market could go back up again. So stock number 5, Data Airlines. I don't like Data Airlines. I don't like airlines, so I don't even need to look at the charts. Of course, I can look at the chart. The 5 years it dropped. That's why I'm not investing in airlines. Well, Buffett used to invest in airlines. He even made mistake. So remember, always stick to your rules. I always stick to my rules, so I don't invest in airlines. So I'm not gonna invest in airlines. So Bank of America, yeah, it's up 12.7%. The past month, it's very normal. Financials, like CNBC, they already reported that financials is gonna be really good in 2024. It's already too late. If everybody is talking about it, it's already too late. I bought American Express before everybody was talking about it. That was last year. That's why now I'm starting to take profits because everybody starts to talk about it. And I don't like the banking business for now, but I like credit card business, American Express. The past 5 years, 32.27. It's okay, not so much. JP Morgan as 10.21%. The past month is good, as expected. The past 5 years is pretty good company. 72.43% going up, not bad. Yeah, if you have bought in 2022 at 100, you could be sitting at a very good profits. Yeah, I was invested in technology stock. My profits were higher, so no regrets. Wells Fargo 12.18% over the past months. 5 year 4.28%. No, so compared to JP Morgan and Bank of America, Wells Fargo is not as good a company as them. Citigroup 13.52% the past month. 5 years, no, Citigroup is even worse than Wells Fargo. So if you look at all these 5 stocks, JP Morgan could be the best stock. The next one will be Bank of America. The third one will be Wells Fargo. The fourth one could be Citigroup. The fifth one was Data Airlines. Yes, you know what's the best stock? The one that I used to own, American Express. 5 years, 91.84%. That's how you analyze a great companies. So only 5 steps. Has it been going up the past 5 years? Yes. Then has it been in the business for at least 10 years? Yes. American Express since 1850. Has it been a public company for at least 5 years? Yes. And do I like this business? I like credit card business. Yeah, so 50-50. So I invested in American Express. When it was undervalued, when nobody wanted it, I invested in American Express. So that's why I got profits. Look at that. Express 2,000 profits from American Express. Yeah, So it's pretty good. That's how to analyze stocks, how to pick a good stock. So for January, for next week, I believe it's going to be volatile, going up and down, and depending on CPI data, it could be really good on Thursday or Friday, or it could be bad. So depending on that data. If you have any questions, comment down below. If you want to watch more about my life, stocks, options, crypto, you can go to my YouTube and go to live or go to playlist, share, subscribe. I will